In this video, I'm going to give you tips on how to build wealth. Now, building wealth doesn't just mean making money from your 9-to-5 job and then putting it into a savings account that pays minimum interest. If you want to be smart like the wealthy, you have to know how to take advantage of taxes, investing, financial planning and owning your own business. In this video, I'm going to give you some insights into how the rich build their wealth and how they keep it. So grab a cup of coffee, subscribe and like this video, and let's go. The first thing we're going to talk about is taxes. The wealthy treat taxes differently from the common folks. They avoid taxes and build wealth by buying assets and borrowing money. The wealthy don't have much of their wealth in actual cash, but rather in assets. Why? Because the right assets appreciate in value, while cash has historically lost value. Once you have assets, you can borrow money and use these assets as collateral. And the great thing is you can write off the interest of these loans from your taxes. But remember to consult with your tax advisor or accountant before doing this, since different types of loans are treated differently in the eyes of the IRS. Here are some tips from the wealthy. Number 1. Own a business. Pay your kids under 18 up to $12,950 and you can deduct this from your taxable income. They will pay no taxes on that $12,950 and you just avoided taxes on this amount. Number 2. If you earn less than $40,000 per year or $80,000 if married, you can pay zero taxes on any long-term capital gains. Number 3. Consider moving to a tax-free state. There are 9 states with no state income tax, and they are Texas, Alaska, Florida, Nevada, Wyoming, Tennessee, Washington, South Dakota, and New Hampshire. The second is investing. The only way to true wealth is through investing. Just saving your money will not generate returns, and inflation will eat away at the value of your cash. The common assets that they invest in are the stock market, real estate and businesses. The easiest asset to invest in is the stock market, since you can buy any stock at the press of a button nowadays. I would advise just buying an index ETF so you never have to worry if the company goes bankrupt. You can buy a safe ETF like SPY that tracks the S&P 500 or a more volatile ETF like QQQ, which tracks the Nasdaq or tech sector. Just use dollar cost average, and if you don't know what that is, check out my video here. Buy when the market drops and just keep doing that for the next 5 to 10 years, you will thank me for it in the end. The wealthy 10% of Americans has 90% of their money in the stock market. Shouldn't you? Another option is investing in income-generating real estate. This asset will take up more time and work on your part, but if you find the right tenant, it's automatic monthly cash flow. The right kind of real estate will also increase in value over time and multiply your net worth. And here's the kicker, real estate provides the magic word called appreciation. Even though in reality your asset is gaining in value, on paper it's losing value every year. Again, please consult your accountant or tax advisor for more information so that you are following the rules. The third is investing in a business that already has management in place. It's called absentee ownership in business. If you have a knack for being a business owner and have a type A personality that likes to juggle many hats at once, then owning an absentee business might work out for you. The ideal business for this should be simple products with a simple system to operate and relatively easy to hire. Businesses such as laundromats, gyms, car washes can be a good fit for this. All you have to do is manage the manager that runs the day-to-day. If you are successful at this, then you will have another source of income while being able to write off expenses related to the business. This is the power of what the rich calls alternate use of your cash. If you had $75,000 of savings, you can either leave it in the bank and earn 2% interest, as of today, or you can buy a business for the same $75,000 that conservatively earns $35,000 a year. The business will give you a 45% return, all the necessary write-offs and cash that you can invest in other assets. If you borrow the money or if the seller offers financing, your returns can be even higher. It's incredible when you look at things differently than what an average person would. The last thing is fixing your personal finance. Before you can build wealth, you have to have discipline in your financial life. Pay off any consumer debt with high interest rates or consolidate it to a low interest account. There is no way to build wealth if your money is used to pay off interest instead of being invested. Second, become frugal and cut your non-essential expenses in half. For example, instead of eating out 5 days a week, you can cut it down to just 2 days. You will be surprised at how much money you will have when you do that. Third, increase your income with side hustles or side businesses. There are so many more opportunities than in the past where you can have another source of income. There are countless other ways to supplement your income such as Uber, Instacart, Lyft, etc. There are also home-based gigs such as virtual assistant, website designer, audio transcriber and more. Go check out my video here for more of these side hustles. And lastly, establish an emergency fund that will last for at least 6 months. This fund should be in an interest-bearing account and have instant access. Not only will it give you security, but also the fortitude to invest with your cash. Well, there you have it. Principles to follow so you can become part of the 1% of Americans who are considered wealthy. Please subscribe, like and comment here for future videos. Until then, invest smartly and see you soon.